Hey, Pat.
Hey, Jody.
You and I have been around a lot of investment communications and in this world for a lot of years. And I think we can agree that last week was like none we've ever seen.
A roller coaster.
That's for sure. So many nervous investors, both retail and professional investors, struggled with the wild markets, and investment communication professionals mobilized to respond. Sir John Templeton once said that the most dangerous words an investor can say is, "This time is different." But the Wall Street Journal didn't seem to agree last week because over the weekend they posted a story that said, quote, President Trump's tariff mania is rewriting the investment playbook.
Yeah. Yeah.
And your blog this week, you argue that from a communication standpoint, this time really might be different. So I really wanted to chat today on this super timely topic. So thanks for taking a few minutes to talk with me.
Yeah. Looking forward to it.
Can you just start by describing what was the standard playbook? You've spent a lot of time communicating through volatility in a number of your roles in the past, and certainly with us at the Lowe Group. How would you normally respond in the past to periods of extraordinary volatility?
Yeah. Right. Well, this is different. This time feels different in so many ways. And which is unfortunate because there was a script. you know?
Right.
Volatility is a feature, not a bug of investing. So when markets turn rocky, most firms have a standard response to reassuring clients and helping. And by clients, I mean financial advisors reassuring their clients. So the core story is that you stay invested in order to benefit over the long term. Many of the market's best days happen right around the market's worst days. And those who try to time the market need to get two calls right? When to get out and when to get back in. It's better just to stay in. So firms typically maintain a library of charts and narrative that they rely on to support the story.
So what's changed now, though? What's different today?
Oh, well, I mean, read the Wall Street Journal, right? But so from our perspective, it's different this time for so many reasons. First, there's the catalyst itself. It's tariffs. That's not a story that anyone has been prepared to talk about. The banked communications that firms have on how markets have historically performed during recession, right? Recession was an anticipated story for several years, and there was a lot ready to go. Should we have a recession, there will be a lot ready to unleash on that. Same is true for how the market performs in inflationary periods. But there's been no reason to be prepared with how the economy or how the market responds to tariffs. It's just like this is an old story, a super old story, but this is new territory. So, and what's more, which is what I think the Wall Street Journal and others are commenting on, is that the story's been, somewhat chaotic, confusing. There have been reversals in direction. None of that helps when you're trying to work with investment strategists and portfolio managers to get something out the door. Super short shelf life. And then there's a concern that all of this, the bond market's reaction, the declining value of the dollar, all of it, it's like this is bigger than a periodic market drawdown. So in other words, something new to talk about and also super uncertain, not just a periodic thing, but super uncertain. Then, the post gets into, so it was a long post and then gets into lots of other considerations. So for firms with ETFs, they have a greater responsibility now for communicating with self-directed investors. Historically, the focus has been on preparing communications for advisors to use with their clients. And remember that mutual funds price just once a day, and that's after the market closes, right?
Yeah.
But you can watch your ETF go up and down all day. And if you don't have the support of an advisor, that can be very anxiety creating. And investing is just a much more ubiquitous topic now. CNBC, used to get some criticism for being, having the drama on all day, but actually they just program for about 14 hours a day. Social media platforms, they keep going all day and all night, right? That doesn't mean the communicator needs to work around the clock, but it does mean that there's more to listen to understand what people are saying and worrying about, because paying attention really helps tune these subsequent communications. But you and the Lowe Group media team know better than anybody about how many more outlets that there are out there today to monitor, and also for an asset manager to conceivably share their perspective on. What are you seeing?
Well, that is really true. The world really has changed. It used to really be just traditional media, broadcast media, and maybe a few bloggers would be on our list for outreach. But today it really has changed. What we're paying attention to is that there are influencers, and these influencers themselves may be financial experts, they may be podcast hosts, they may be journalists, but they're people that other people are paying attention to, and they're creating their own content, and then they may have a podcast, and then they're posting on social media, and other people are quoting them. So, again, people were paying attention to, Michael Batnick and Ben Carlson, Animal Spirits
Sure.
podcast, Chuck Jaffe. And then there's like advisors and strategists that are widely followed, like Josh Brown and maybe David Kelly at JP Morgan, or Michael Antonelli at Baird. They've all grown their following and are influential in their own ways. And then there's industry experts that are sort of quasi journalists, but also sort of widely. There are book authors and things like that. Christine Benz at Morningstar, Wade Pfau, Michael Kitces. They all crank out their own content. They
Yeah.
host their own podcasts, and many of them, are regular sources for media too. So our clients often want to be in front of those people as well. It really expands who we need to reach, especially in periods like this.
Yeah, right. In periods like this where everybody wants to get out there and say something, right? Back in the great financial crisis of 2008, there were a lot of stony faces in the financial news, trying to make sense of what was happening. They were establishment. They all came up through the ranks. They measured their words. They understood they needed to be responsible about what they said about the country's financial system. Today, there are many more faces, not just the ones that you mentioned, Jody, because they all tend to be more tradfi as well. But there are more faces, more personalities in social media. They're colorful, they're animated, they're
Yeah.
communicating to get attention, to promote sharing and followership, and they're part of the mediascape too, because
Yep.
they're educating investors, and some of them are super responsible as well, and some of them take some sort of they take some sort of leaps that maybe not everybody would agree with. This can be mind-boggling for people who have been into the industry, or who have sort of stuck to traditional reading habits or information consumption habits. But some investors are going to know the social media personalities better, and they may not even recognize the name of Jerome Powell or Jamie Dimon,
So true. Yeah,
right?
it's so true. Right. And those people are moving quickly in short form.
Yeah.
You write about that in your blog. I find that so true, right? And we and the communications professionals we work with really need to think about that audience are getting used to that they want to see short form videos. They want to respond to social posts. It's not just putting a long blog or a white paper on on your website anymore, right? That
Yeah.
was the old playbook. So what are the components of the new playbook in this environment, Pat?
Yeah. Well, and before we even do that, just to say, um, there are more responses right now, right? More possible responses to volatility. It's not
Yeah,
just stay
true.
invested, right?
Yeah.
So for our clients, for investment communicators, there's this opportunity to use this volatility to suggest a diversification and get away from the drama of the public markets. Perfect. We have a product for you. It's private equity or Bitcoin, or even just non-US. So, people for working for asset managers, advisory firms, or just civilians on Reddit, some of them are talking about, okay, let's talk about, much more than we ever heard before, tax loss harvesting. Right.
Yeah.
So there could be multiple objectives for the market volatility communications, much more than there have been. And the last thing I would mention before we get into the new playbook is this polarization that's been out there for a few years. And it's realistic to assume that it's part of these communications. I mean,
Yeah, that's hard.
we work at the core of what everybody's talking about, and everybody's talking about the economy, the markets, and there is a political overlay,
There
right?
is.
So
And
at the
disagreement, right?
yeah,
It's
yeah.
you're gonna have divisiveness either way. Yeah,
And also people are looking for, at the extreme, people are looking for agendas and everything.
yeah,
So,
so true.
people who look at communications through a political license, through a political lens, communicators need to be aware of it. For some, and I have seen this, a firm's use of Liberation Day, which is what the president called the first day of the tariffs, just the use of that term could be considered provocative or telling about a firm's agenda. So
Mm,
it's really treacherous territory right now.
treacherous. So what's your advice?
Yeah, yeah.
What
Keep me on track.
you
Right,
really
right,
talked
right.
about that. So, but there are things that people should be thinking about differently now. What are
Yeah,
those things?
yeah. And it's not so much that things are new, it's that the emphasis has changed.
Yeah.
And at the top of the list, I would put a trusted brand, right? This
Mhm.
is such a confusing time. When the industry's most prominent firms issue forecasts and then revise the forecast. We all know what goes into the work that goes into creating a forecast, and then to revise the forecast hours later, which is what Goldman Sachs did last week.
Crazy.
You have to expect investors to be confused, right? I mean, who isn't confused and their confidence shaken? So number one is to to bring yourself as a trusted a brand with integrity. Assets wise, it's everything you talked about, Jody. It's the quick take narratives, it's charts, and actually in the charts, I would say there is a potential. Years ago, in more innocent times, people would sort of every once in a while, an asset manager would create a chart, and they'd be like chart crime, and everybody'd sort of have some fun with it, and the chart would get corrected. Today, don't dismiss the chance that somebody could be reading something into it. You have to be really careful with your charts. Make sure that the point that's being made are easy to understand and believe in. Video shorts, of course, anything that's quick to produce and distribute off your own domain. Some of these communications, like I said before, they're not going to have long shelf lives, and they're going to need to be replaced with something, right? You create something, then you run back to the front of the line and you create again.
And again, just to wrap this all up, again, people are used to operating and have done it in one way for so many years. If there was just one thing that you could advise, investment firms to do differently, what would it be?
Yeah. So the first thing I would say is I just want to acknowledge that all of this is happening at the least optimal time for somebody responsible for creating investment communications, right? It all happened. I mean, April 2nd was Liberation Day, the days immediately following the end of the first quarter when everyone is looking to the marketing communications team for updated data. So combine the updating season with the volatility and how irregular it all feels. This is not the time to have headspace to dream up something new or to innovate. Communicators are really in this production mode. But having said that, I'm gonna answer your question. Because it's something that we talk about and we think a lot about. When there's a plane crash, airlines pause their advertising, right?
Yeah.
At a time like this, when the markets are so volatile, I'd really like to see more situational awareness on social media and a pause on what is in the queue that's scheduled to be posted. There's an opportunity right now. I mean, never has there been, we used to call it a teachable moment. There's never been an
Yeah.
opportunity to engage in a really authentic way right now. The original idea of social media was that it was a conversation and people are out there looking for insights. I pay a lot of attention to the asset managers on LinkedIn and Twitter and YouTube. I follow them along with a lot of other investment industry accounts. And in the feed, it's just jarring to be reading along about everybody talking about what's happening and then to see some promotion. It's a disconnect. And I don't think it reflects well. I miss the days when more firms posted incremental market insights, a specific comment from an interview. And I don't mean, oh, we're going to be interviewed or we've been interviewed, but actually the extraction of a specific insight from an interview or a data point, something that could make an impression on somebody scrolling through their feed that could help shape their perspective. I think that could really help show that a firm is paying attention to its clients and that they're in the mix. Of course they are, and that they're relevant to what's being discussed. That's the one change I'd make.
Yeah, and with the pace of change, that's really good advice, Pat. You can just sort of see how important it is to sometimes pause and really think carefully about what you are going to post right now, right? Just to maintain that, like you said, that reputation, that um, authority, and the quality of your brand with your customers, right? Getting that right is so critical. Well, Pat, thanks again. It was really a thoughtful blog this week. I really liked it, and thanks for taking a few minutes to talk with me about it.
Of course. Well, communication show you care, right? That's what we've learned over the years. You just have to care. You may not know the answer. You just care. And of course, I think us doing this shows that we care.
Yeah, we do. We definitely care. Have a good day.
You too. Bye-bye.
Thanks. Bye bye.